Two indicators, same chart. One works perfectly for a day trade, the other completely destroys you in a swing trade. There are a lot of things that can cause an asset to move for day trading, but the first major input that I want to talk about is breaking news. Day trading can be created or destroyed within minutes by a headline, so a technical setup without a news check is incomplete. The part I pay closest attention to is the reaction to the news. If good news cannot produce a rally, that weakness matters. If bad news cannot immediately be reclaimed, the risk may have been priced in, or buyers may be absorbing the selling. When news breaks, I want to know what happened, what the market expected, and how price reacted. While breaking news is unexpected, the economic calendar covers the risk you know in advance. There's honestly no excuse for being surprised by any CPI, jobs data, or a central bank decision any specific day. You obviously can't predict the outcome. That's what they call insider trading, but you can definitely be knowledgeable about how the market is forecasting the event. Given how globally connected markets are these days, you should also check international events, because something like a Bank of Japan decisions can affect global markets through the yen carry trade, or you can have data from China which can impact commodities or industrial stocks. If I'm not trading the event, I generally don't open a position right before it. I let the initial volatility settle, and then I see if the price holds the level I want. A wick through resistance during CPI is very different from a breakout that holds after the market processes the number. In Rift, for all company earnings events, we also show Paley market odds, which gives me a pretty good read on the market expectations. They don't tell me what is guaranteed to happen, obviously, but they do show how much surprise may already be priced in. Now, getting into more on the technical analysis side of things, once I know why the asset is moving, I move to the technical trigger. The first thing I like to look at is if there's a key resistance breakout through a level that matters. Those levels could be the prior day high, pre-market high, the opening range, or a level that previously rejected price several times. Now traders, especially when they're starting out, tend to see every break as valid, which definitely isn't the case. You want to see a close beyond the level, expanding volume for that time of day, and then either a follow through or a successful retest. If price immediately closes back inside the range on weak volume, the breakout is probably failing. The second signal that I use for day trading is a Keltner channel breakout. Keltner channels are technical indicators. They use an EMA or exponential moving average in the middle with ATR-based bands, so the channel adjusts to recent volatility. Keltner channels help to better track breakouts because a 2% move in a slow stock and a 2% move in a volatile stock, they don't mean the same thing. A close outside the channel tells me the move is unusual relative to the asset's normal range. It doesn't tell me if the level matters more though, so pair it with a key resistance breakout. One shows a structural break, the other shows volatility expanding. Now the framework you use for day trading is pretty straightforward. Check the news and economic calendar, understand the current market regime and sector character, mark the key levels, and then wait for the trigger and define invalidation before entering the move. The move should show timely follow through, so don't let a failed day trade quietly become a swing trade just because you don't want to close it. For most day traders, the 5-minute or 15-minute candle sizes are pretty good to help define the setup, and then you can even use lower time frames to refine execution. Now, everything I just covered assumes you already understand the core indicators that these signals are based on. If you're trading, you need to know about the basic indicators like moving averages, MACD, RSI, and especially ATR, which I'll talk about in a bit. ATR is the one a lot of traders completely ignore, which is a complete mistake, because without it, your position sizing is essentially a guess. I put together a full breakdown of ATR and other basic indicators in a separate video. It's linked in the description below, and I would watch it right after this one. Now, swing trading, unlike day trading, gives you more time for confirmation because it's based on a longer span of time. For swing trading, I care less about one spike and more about whether the structure has changed, a trend is developing, and volatility is expanding. Like day trading, news and econ calendars still matter, so you want to pay attention there. Swing traders also carry overnight and weekend gap risk, and earnings during your hold period can change the trade before you get a chance to exit. So if you're swing trading, you still want to be up to date on any information coming out that pertains to your asset. The first swing signal I want to walk through is called change of character, which is the first meaningful break against existing price structure. In a downtrend, a bullish change of character triggers when price breaks above an important previous lower high, showing that buyers might be taking control. In an uptrend, a bearish change of character triggers when price breaks below an important previous higher low, showing bullish structure might be weakening. A normal pullback stays within existing structure. Change of character breaks the swing point, protecting it, but keep in mind that change of character is an early warning that still needs confirmation, and a 5-minute change of character doesn't carry the same weight as one in the daily candle. Because change of character is early, you want to have a next signal that adds confirmation. So the second signal I use for swing trading is using Supertrend paired with ADX for confirmation. Supertrend uses ATR-based bands to identify direction, and it flips when price crosses the relevant band. ADX, or Average Directional Index, on the other hand, measures trend strength without having an opinion on direction. For ADX, a value above 25 signals a strong trend, and a value below 20 means that the trend is weak or it's a consolidating or sideways market. A long signal triggers when Supertrend turns bullish and ADX confirms enough strength. A short signal does the reverse. This filters out some Supertrend flips during the sideways market. The trade-off is, of course, later confirmation, and a high ADX does not automatically make the current price a good entry, so still look at other indicators and multiple time periods for confluence. The last signal is a squeeze momentum breakout. Change of character looks for a structure change. Supertrend plus ADX looks for direction and strength. The squeeze looks for volatility moving from compression into expansion. When Bollinger Bands contract inside of Keltner Channels, this means that volatility is unusually low. This is the squeeze. When the bands expand back outside, the squeeze releases, and a momentum histogram shows direction. Positive momentum creates a bullish signal, and negative momentum creates a bearish one. On a 4-hour or daily chart, the squeeze can represent several sessions of consolidation, so the release may catch the start of a multi-day move. An ATR-based trailing stop gives volatile assets more room, but expansion doesn't guarantee a trend. I still want a break of an important level, expanding volume and momentum that agrees with the larger structure. So all in all, these 3 signals answer different questions, and I like to use them all together as confluence. Change of character tells me structure may be changing. Supertrend plus ADX gives me direction and strength. Squeeze momentum tells me that volatility is beginning to expand. Now, these 3 signals work because they each answer a different question, but there is a second tier of indicators that takes this framework even further. Bollinger Bands, Supertrend variations, Vortex, and the accelerator oscillator. Each one adds more precision to how you read volatility compression, trend strength, and momentum shifts. Once you have the confluence framework down, those are the next ones to understand. I have a full breakdown coming on all 4, so subscribe and turn on notifications if you don't want to miss it when it drops. On Rift, you can subscribe to the signals, get notified when they trigger, and automate trades around them. You can also see how each signal has historically performed based on how long you plan to hold it. When looking at the signals details page on Rift, the past performance chart shows every historical trigger through the selected holding period. You can also see the historically optimal hold and optimal gain, the win rate, risk reward, past ROI, and every previous trigger. I look at win rate together with risk reward, sample size, and time period selected because win rate alone doesn't necessarily tell you if the strategy actually made money. If you plan on holding for 1 month, judge the signal on how it historically performed over a 1-month period, not on what happened during a 5-minute candle. A day trading setup should tell you what is moving, where the level is, and whether the breakout has the participation to actually continue. A swing setup should tell you whether structure has changed, whether volatility is expanding, and whether a trend is developing that could last multiple sessions. The problem traders run into is not understanding the signals. It's having to jump between 5 different apps to actually act on them. Rift puts all of these into one place. The newsfeed, economic calendar, backtested signals, indicators, market scanner, and a lot more are built directly into the charting experience and the signal engine. You can review each signal's historical performance, set it to execute trades automatically, and log the trades in your journal without ever leaving the app. Whether you're a swing trader or a day trader, Rift can help you improve your trading. Download Rift using the link in the description below and watch one of these videos next.